Okay, now we're going to work problem S5-3, and it's on page 329 of your textbook. We're going to journalize some purchase transactions for Dady Drugstore. And so I'm just going to read the transactions to you, but you can follow along in your textbook. On March 2nd, Dady buys $20,250 worth of inventory on account with credit terms 3% in 15 days or net 30, and it's FOB shipping point. So that means that the title to the goods is going to transfer when they're shipped from the vendor. On March 3rd, Dady's going to pay a $90 freight charge. On March 8th, he's going to return $5,000 of the merchandise due to damage during shipment. And on the 14th, Dady pays the amount due less the return and the discount, of course, because he's going to pay in 12 days, and they only need to pay in 15 days in order to get the 3% discount. Okay? So let's take a look at journalizing these transactions. So our first transaction occurs on March 2nd. We're going to buy inventory for $20,250. So we're increasing our inventory account. So we need to debit inventory. And we're buying it on credit. So we're going to credit accounts payable for $20,250. On March 3rd, we're going to pay a freight charge, and freight that we have to pay adds to our cost of inventory, so we're just going to debit inventory for the freight charge for $90, and we assume that we paid it in cash because it doesn't say it says that we paid it. We didn't put it on account, so cash is credited $90. On March 8th, Dady returns $5,000 of the merchandise due to damage during shipment. So this is going to decrease our inventory and also decrease the amount that we owe the vendor. So we need to debit accounts payable for $5,000 and credit inventory for $5,000. And finally, the last thing happens on March 14th. It says Dady pays the amount due less the return and discount. So we have to calculate how much cash is due to the vendor at this point. Okay? So we can examine our accounts payable T account to do this. We initially purchased $20,250, so that would have been a credit to accounts payable. We returned $5,000, so there was our debit to accounts payable. So before anything else happens, we're going to have a balance in accounts payable of $15,250. Okay, that's our initial purchase of inventory less our returns. But we also have to account for our discount we're going to take. We're paying it in 12 days, so we're entitled to the 3% discount. So we need to calculate the discount. I'll just do this separately here. Which is equal to $15,250 times our 3% is equal to $458. So the cash that we actually have to pay the vendor is $15,250 minus the $458 discount. The cash that we're going to end up paying is $14,792. Okay? So to begin this transaction, but to begin journalizing it, we know that we have to take this $15,250 out of accounts payable, so we're going to debit accounts payable for that amount. So let's return to our journal transactions. Here we are. We're going to debit accounts payable. For the $15,250. We're going to credit cash for the amount of cash we're actually going to pay, and that was the $14,792 that we just calculated. So if we just stopped here, we wouldn't balance, our debits wouldn't be equal to our credits. So we know we have to have a credit entry that balance out this journal entry, and that's going to be to inventory. We need to reduce the cost of our inventory by the cash discount that we're taking. So we credit inventory for $458. Okay, and that's the solution to 5-3. Requirement number 2 says how much did the inventory cost. Well, the inventory cost, we can do that transaction here. We can analyze it by looking at our inventory account. We first debited $20,250. That was our initial purchase. Then we returned, then we paid for freight for $90. Then we returned merchandise for $5,000. And then we took a cash discount of $458. So if we were to calculate the balance of this account, that would give us our cost of inventory, and it's $14,882 is our cost of inventory in 5-3.